Here's one thing that could possibly boost markets today.
The Monetary Board decided to cut the interest rate on BSP's overnight reverse repurchase facility by 25 basis points to 4.25%. Accordingly, the interest rates on the overnight deposit and lending facilities were reduced to 3.75% and 4.75% respectively. The Monetary Board's decision is based on its assessment that price pressures have continued to ease since the previous meeting. Latest baseline forecasts of the BSP indicate that inflation remains likely to settle within the inflation target of 3% plus or minus 1% percentage point for 2019 up to 2021.
Yes, that is a cut, everybody. BSP's 25 basis point cut now has the benchmark rate at 4.25% as widely expected. Bangko Sentral Governor Ben Diokno calls the rate cut a preemptive move against weakening in the global economy and sustained trade tensions. But the question is, why not a 50 basis point cut? Well, Deputy Governor Francis Daquila says there's no compelling factor to go for a larger cut right now. That being said, BSP Governor Ben Diokno tells Bloomberg that he sees further easing for the remainder of the year. But not just policy rates, the central bank also slashed its inflation projection for 2019 to 2020 and introduced a 2.9% forecast for 2021. The BSP sees relaxation in price pressures and the rice tarification law doing its thing to help stabilize food prices.
For both 2019 and 2020, the risks are evenly balanced. For 2021, they tilt somewhat to the downside because of the prospect of slower global growth. Now, the main factors that have contributed to the benign inflation outlook and the downward revisions are we see a continuing relaxation of constraints on food prices, in particular the impact of tarification on rice.
But with that good news, the central bank also cautions on weak global economic activity affecting countries. Now, the Philippines may see a recovery in its GDP, but the BSP says the country must avoid another instance of a budget impasse.
Weaker global economic prospects continue to temper inflation outlook. The potential adverse effects of a prolonged El Niño episode to inflation have subsided. The Monetary Board noted that prospects for global economic activity are likely to remain weak amid sustained trade tensions among major economies. Domestically, the outlook for growth continues to be firm on the back of a projected recovery in household spending and the accelerated implementation of the government's infrastructure spending program, after the delay in expenditure due to the legislative impasse in the approval of the budget in January to April 2019.
As for cuts in reserve requirement, the BSP says they are still monitoring domestic liquidity. Talks on RRR cuts, they say, is alive, but best saved for another time.
We have yet to see the bulk of the liquidity going into bank lending and the economy. But of course, the decision on when to resume the reduction in the reserve requirements is a live discussion at the board.